Last time, we talked about how John Law used paper money and speculation in Mississippi Company stocks to solve France's huge debt problem. John Law quickly became the most powerful and popular person in France. This time, we'll discuss the hidden dangers in his financial system. Understanding these risks helps ordinary people avoid being misled by the government. During this period, the large amount of money circulating in France did boost the economy in the short term. As I mentioned before, Western Europe already had a massive trade volume at the time, and stocks helped absorb the paper money. This kept inflation from being obvious, making the economy look like it was thriving. In reality, inflation was reflected in the rising price of Mississippi Company stocks. But since rising stock prices made everyone happy, people didn't see it as a warning sign. John Law, however, understood that endlessly rising stock prices were dangerous. Mississippi Company stocks required dividends, meaning the company needed to share some of its profits with shareholders. By 1720, the company's value had reached 6.24 billion. If it paid a 2% dividend, it would need 124.8 million. However, the company's profits were mostly exaggerated, with actual yearly profits being only 78.5 million. John Law realized he had to find a way to make more money for the Mississippi Company, and therefore for the French government. Otherwise, he'd face the same fate as the Chinese nationalist government in 1948, unable to make money or repay debts, eventually leading to collapse. What caught John Law's attention was France's taxation system. At that time, France used a tax farming system. Simply put, the king hired tax farmers to collect taxes for the country. The king only required them to deliver a fixed annual amount, such as 80 million livres. If the tax farmers collected 90 million livres, their profit would be the extra 10 million. This system, which originated in the Middle Ages, was outdated and inefficient. Tax farmers took a significant portion of the revenue and often harshly exploited ordinary citizens to ensure their profits. John Law believed that if he could completely reform France's tax system, he could greatly increase the government's income, giving the money he printed a solid backing. Unfortunately, after centuries of development, the tax farming system had become a powerful interest group. Even the French king lacked the strength to confront it. Although John Law managed to wrest a tax contract from one powerful tax farming organization, the Paris Brothers, he couldn't shake the entire system. This meant he couldn't significantly enhance the revenue potential needed to support his financial ambitions. In January 1720, following the booming success of the Mississippi Company, Prince Condé, a strong rival of the regent, wanted to get involved in managing the company and buy original shares at low prices. John Law, of course, refused to let him seize the company's wealth for free. In retaliation, Prince Condé transported 3 wagon loads of paper money to the royal bank, demanding to exchange it for gold. Although the bank had enough gold to fulfill the request, such a move was risky during a period of soaring stock prices. When stock prices rise excessively, it leads to another issue. More people want to sell their stocks for gold or silver, cashing in on their profits. If this trend spreads, the Royal Bank of France would inevitably run out of precious metals to meet the demand. Prince Condé's actions, like the first domino to fall, fueled a wave of public desire to exchange high-priced stocks for gold and silver. Feeling the pressure, John Law pushed the government to issue a series of drastic decrees. At the end of 1719, a law was passed to confiscate all old gold and silver coins. By March 1st, 1720, wearing gemstones was banned. On March 18th, goldsmiths were prohibited from selling gold and silver items. The next day, individuals were barred from owning more than 500 livres worth of precious metals. The goal of these measures was to forcibly remove precious metals from the market. Soon after, the Mississippi Company took control of the Royal Bank. This meant the institution issuing the country's currency and its most profitable organization were now merged. It immediately brought to mind the Federal Reserve in the US. This ancient version of a French Federal Reserve wasted no time implementing its first major policy, transitioning the nation's currency from a gold-backed system to fiat money. I have explained fiat money in previous videos. It's currency supported by a nation's production and income, not by physical gold or silver. However, this shift naturally alarmed people accustomed to using precious metals as currency. A simple question emerged: without gold or silver, could these pieces of paper still buy baguette and butter? As public confidence wavered, the French Fed issued another controversial decree on May the 21st, halving the value of paper money. The reasoning was both simple and absurd. There were 2.6 billion livres of paper money in circulation, while the bank held 1.3 billion livres worth of hard currency reserves. By devaluing the paper currency by 50%, they wouldn't need to worry about people exchanging it for gold and silver. When faced with the crisis, governments typically aim to stabilize market confidence, even resorting to lies if necessary. However, the French government's actions in this case did the opposite, revealing panic at every turn. As a result, Mississippi Company stock prices plummeted, the bubble burst, and the wealth of countless ordinary people vanished. The angry French public, along with the elite class John Law had alienated, were eager to see him punished. Under the protection of the regent, he fled France, eventually dying in poverty in Venice. This event became known as the infamous Mississippi Bubble. John Law's experience is strikingly similar to that of one of China's most renowned reformers, Shang Yang. Both left their homelands for countries that valued their talents. Both gained the trust of the most powerful figures in their adopted nations and initiated significant reforms. In the short term, both of their reforms succeeded and achieved their initial goals. However, the impact of their reforms differed. John Law's changes had only fleeting benefits, while Shang Yang's were more enduring. His reforms transformed Qin into a powerful state, laying the foundation for Qin Shi Huang to unify China. For those interested, you can watch my video on Shang Yang's story. Their fates, too, were remarkably similar. Both angered many people during their reforms and met tragic ends. Comparing John Law and Shang Yang highlights fascinating patterns in history. Despite being from entirely different cultures and separated by 2,000 years, they share so many parallels. This is the intriguing nature of history. You can find similar events and figures across different countries and eras, uncovering patterns and lessons that repeat over time. Alright, let's get back on track and wrap up the Mississippi Bubble. Throughout this event, we see how difficult it is for ordinary people to resist a scam of this scale. First, the government directly participated in fabricating Mississippi Company's profitability, giving credibility to its unrealistic business ventures. People believed that the cash-rich Mississippi Company would invest in and develop its operations, but behind the scenes, the money was being funneled into low-interest loans to help the government pay off debts. When a national government is actively involved in such deception, it becomes nearly impossible for regular people to detect the fraud. But does that mean ordinary people are completely powerless? Not necessarily. First, stay informed. If someone had known about the immense difficulties in developing the Louisiana colony or the lack of significant gold and fur resources, they could have been more cautious. This information was hard to come by at the time, but wasn't entirely hidden. Secondly, control greed. When the government offered the chance to exchange bonds for priority rights to buy stocks, it should have raised alarms. Of course, it's easier to say this now, looking back. At the time, the modern financial system was still immature. Public understanding of it was limited, and the daily surge in stock prices made it nearly impossible for people to see the risks. This is exactly why understanding history is so important. By knowing what happened in the past, we can better prepare ourselves for similar situations in the future. When a government is heavily in debt, it's a red flag. When it starts printing excessive amounts of money or tries to lure you into exchanging bonds for stocks or another exciting investment opportunity, be on high alert. Okay, that's it for this video. If you enjoyed it, please like and subscribe. If you have any suggestions or thoughts, feel free to leave a comment. See you next time!